Hi, this is Ron Janish. Regardless of what kind of technique you use, what you're about to get in this video is an understanding of how you can use the techniques you presently use to get an edge by simply understanding what other people do in the markets. Number one. Number two, if you use the Andrews indicators, you'll probably have a significantly better edge, as you'll see. But nevertheless, here's how things work. First of all, we have different types of traders out there. There are predominantly four different types. One is the breakout trader, and that's somebody who quite often will perhaps draw a trend line, let's say from here to here, and after prices break up above this trend line, they get a buy. Okay? Or maybe they watch prices come down here, they watch this here, and prices break above this trend line, and they get a buy there. Okay? Or let's say they're using Gann, and they see a head and shoulders pattern, and there's one over here, and so prices break down here, and they get a sell to go short. That's a breakout trader. Then you have the reversal trader. And a reversal trader will typically look for something that tells them the market is going up or the market is going down. Let's say it's somebody who's learned that simplistic concept that after prices zoom the ML, they retrace back and then go further in the original direction. Let's take a look at that. So here your prices zoom through the ML, they retrace back and then go further in the original direction. Great. And so when prices come back down, they're going to be looking down in this area here for a buy, more than likely. They're using weekly charts for their MLs, and if they use the 50% point, it may be up here, and if they use this other Fibonacci points that are coming down further, it may be down here somewhere. In either case, that's an example of what a breakout trader does. Okay? Or breakout trader might say, gee, here prices didn't make the median line, and whoops, let's do this here. Okay, and so prices here didn't make the median line, and oh wow, that means they're going to go the other way a lot. And after prices break the trend line over here, for example, here comes a trend line in. Prices break up through the trend line. They use a combination of the pullback rule and the breakout rule, and so they will say, gee, prices have broken through here and they haven't made the median line, therefore according to Hagopian's rule, and this was in the original Andrews course, we don't use it, that we would wind up buying here. And unfortunately a trader like that might wind up enduring the pullback that occurs during this particular experience right here. And if they're willing to live with that, no big deal. Prices eventually go up and they make a nice profit. Okay, those are some of the different ways. So we have the breakout, we have the reversal trader, and the reversal trader is looking for reasons why prices are reversing at a certain point. And so prices might go up to a point where there's any one of a number of different indicators that are some of which are Andrews indicators and some of which are not. For example, you might have the extreme in Bollinger Bands or some kind of an extreme in stochastics or RSI or something like that, and use that for a reason for a reversal trade. Okay, so we have the pullback, the breakout, the reversal, and the theme. Well, if somebody's a theme trader, they see this big huge decline here, and then they see prices going up again, and they figure, well, look, the market is gotta go up because the government is printing all this money, and since Ben wants to print, let's buy, because it's just gonna make prices inflate. So you have these four types of traders. Now what so is that you can use with any technique at all is the very simple principle that the more of these that you have in the market, the later you are in the stage of the trend and the more solid the trend is. Give you an example. Here you have possibly some pullback people that are with the trend and some reversal people. But your breakouts aren't going to come till over here, and lo and behold, what happens? Same with here. Here you have a breakout, and here you have an even bigger breakout. And so your reversal types are going to look for reversals down here, right? And maybe reversals up here. Okay, and your pullback types, they're gonna be buying as prices come down here, come down here. Okay, so if you see something that goes with the overall theme, and you see pullbacks, and you've seen that the reversals have been able to get in because of indicators that were true down here, down here, down here, and you suddenly see breakouts that continue with that, well, what's that trend going to be? How long it'll last, this theory won't tell you. But nevertheless, it will work to your benefit. Now, if you're using Andrews, some other form of solid market geometry, here's the big benefit. First of all, you get to have signals down here, ATRI. What does that mean? Andrews Trend Reversal Indicator. That's all it means. Sometimes I put it as ATRI or ARTI, whatever. It's always an Andrews Trend Reversal Indicator, which is really straightforward, and these are what came in right in here. Now, if you notice the difference, and the ones here that say ATRI, these were ones where prices came down, and this was on a weekly. This was a very, very important low point. This was gotten using the weekly charts. And if you then looked at prices reversing, there wasn't much of a pullback until a couple months later over here. Okay, that's when your really serious pullback came in on the weekly chart. However, on the daily, as you see in this point here and this point here and this point here, there was very little in the way of a pullback that went back to the first bar. Here's the original bar of the bottom. Okay, now if you look at the ones with an S, so if you're using Andrews, you have one type of indicator generally, and sometimes you have more, but I know that in this particular case here we had the ORE indicator come in, and it was just absolutely heavenly. If you watch our videos, you'll see that in some of it we called it a Janish reversal line or whatever, like the came in here and came in here. As I was looking at intraday charts, you'd see, and you have maybe this much data, or on this one here we had maybe this much data saying, whoops, hey, wow, this guy's going to go. Because of that ORE indicator, that this wound up calling a reversal, okay, using a reversal indicator like that, right near the extreme. All right. One of the things that's frustrated me over the years, and I'm now at peace with it, and you're going to see why I'm at peace with it, and it'll make perfect sense to you, as it does to me, was that at some of these points I wouldn't get an ORE. I wouldn't get a certain type of indicator that tells me, or ORE or other indicator that tells me this is an extreme that's going to stick. I don't get one here. I don't get one here. I may have gotten one here, but you know, on sometimes I don't get them at the extreme, and it used to frustrate me when I didn't get the exact extreme. Well, maybe there's a good reason for that. If you notice, wherever I have an S, I got a certain type of signal using Andrews. Very simple, very straightforward. It's right out of the book. In our advanced course manual, you'll see that right here, whenever you had one of these S reversals, it was very simple, straightforward golden pivot rule. That's right in our manual. So in the advanced Andrews course. So what happened here was you had a reversal signal here using the golden pivot rule, and you also, by the way, had other Andrews course indicators coming in here. And these here came in and gave you a reversal, even though you didn't get a strong reversal here, possibly. Okay, let's assume you didn't. Well, that's really, really wonderful, and here's why. What happens here is if you got a weak or a minor signal here that there was going to be a reversal, that was actually, or no signal at all, that was actually good, because look at this. this, when you get this pullback here, the pullback typically goes back inside the range of the extreme day. Okay, so look at this. This is your extreme day, and this was the range. There's the high, here's the low. Notice the pullback for the S signals typically goes back inside the range of the extreme day. Now, with perfect 20/20 hindsight, we can see here's an extreme day, and 1, 2, 3, 4, 5, 6, about 2 weeks later, even if you went short here somewhere, 2 weeks later prices come back inside that range. Now, if you are trading using daily charts, prices going back inside the range, when you've gone short here, could get you to wonder and could get you to exit the trade. Has that ever happened to you? And then prices nicely go in the way of the original trade? Well, guess what? In Andrews, we know that when we get the golden pivot rule, in most cases, it is at the second point, which is typically like a double top. Many would consider this a double top. Well, this is a double top, and here's a double bottom. Okay? And here's another benefit. You've already had the reversal, and you may get another reversal indicator here. People's reversal systems. But what happens then is you've also got the support of the pullback people over here, 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 here. So you've got, and here, you've got the support of the pullback people, the reversal, the pullback, and then at this point here, you can use the same indicator that gets you long here, 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 the mini, right? That's what you use for an actual trigger. Okay, so you use your minis, the Andrews minis over here, okay? Or you can simply, after you get the golden pivot rule, you can simply use a lower low or higher high here. It's up to you what you use, right? Or into something that goes on intraday, if you want to narrow it down to, a 60-minute chart on ES or something, okay, to have a tighter control and a tighter stop along the way. So that's the big benefit. So you get the benefit of all these people here supporting you, or at least 3/4 of them in most of the situations. So let's take a look at this. You have your low here, prices go up, they come back down. Your theme people are going to be looking at getting in here, as are your pullbacks, that some of which are already in, and here more get in. The same happens over here. Now over here you have your standard textbook advanced Andrews WN signal. Over here you have your standard textbook Andrews signal right here as prices come back down. And that's these occur in addition to your ORE. So you have a really nice reversal signal. Then if you really want to hang out there and wait for a nice breakout, you can simply add your minis using Andrews. It's as easy as that. And what we've done is we have prepared a special video for those of you that are going to take the advanced course or have already taken the advanced course that shows the exact indicators that would have gotten you in at these points. And quite frankly, for here, 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 and here, they're exactly the same. So as you see that these are all exactly the same, and you see how they benefit you, you have the opportunity to take advantage of this. And at this time, I encourage you to take the Andrews course, where you can take advantage of getting in before all of these get in, and you have the Andrews edge. I thank you for your time. This is Ron Janisch over at andrewscourse.com. Please join us for number of things. One, if you click on the new, you get this little thing here where you can put in your email address, and at no cost to you, you get to join the free email group that where once in a while you get some charts and get to see the kind of stuff we're doing, and there is a little bit of discussion in this group. Not a lot of emails, just a little bit of discussion and some videos. You also, if you take the course, if you go to this page here and take the advanced course, then you get to step up quite a bit, because at that point in time, as a free gift to you, you get our PT3 software, and you get over 20 videos that are only seen by course members. These are not the same videos as we show to the public. Then you also get to attend a free live get-together that occurs at least once a year, and it's no additional cost to you to come there. And then you get to participate in our private discussion group, where over 30% of the focus is on intraday trades, and that's because it's a quick learning factor. So when there's an intraday type situation and we examine it, you can see very quickly what happened. You don't have to wait a week or 2 or 3 later like you might with daily charts, right? And we also post daily charts, and what I try to do in posting the charts, I try to post charts that are worth examining now. So what happens is I might post a chart with some numbers on the bottom, okay, and these numbers are very relevant to certain course members because it tells them that certain of their favorite indicators are prevalent in this particular situation and are very relevant. And so what happens is people who are course members, when I post a chart, will typically go and go to their computer and do the analysis on their own, because we want people to be able to fish for themselves. Okay, that's what we're looking to do. And so you also get the course manual, the advanced course manual, and that takes you from being a very beginner who knows absolutely nothing all the way to what we call level 3, and where you can know all the advantages that you have and see how you can exactly yourself from there on use the advanced Andrews techniques. Okay, and some of you may want to do a bit more in the way of studies and participate in the massive expanded course. The massive expanded course, you can actually see what the original things were that we looked at before we copied it, and you just click on the page down here and you see that. And if you go over here, you get to see part of what you get should you decide to join the expanded course. And of course, the expanded course always includes the ORE indicator and special other things that are available only to a maximum of 100 people. And it's 100 people, and that's the maximum. That's where we cut it off. In addition to that, the other thing that goes on is that every time somebody purchases this particular course, the price goes up a bit. Okay, and that's how that works. And with this course here, there are 25 or so, or maybe more, additional videos that are above and beyond the course, the videos that we show in the advanced course. We do recommend that everyone go and take the advanced course. We want you to take a look at it, enjoy it, go through the program, and then within 10 days or so of taking the advanced course, contact us if you want to take the expanded course, and we can get you something extra as a gift. And anyway, I thank you for your time, and come and join us.